Hello, everyone, and welcome to our discussion on the best practice for entering payroll in your Pro Cloud. My name is Brad, and I'll be hosting the demonstration today. If you have a question during the webinar, feel free to enter them into the questions pane on your GoToWebinar panel. If the question is outside of the scope of today's discussion, please email them to support@designmanager.com. Lastly, if you miss a portion of the webinar or want to review any of our past discussions, go to our YouTube channel at Design Manager Inc., Design Manager INC. And here you can see a whole bunch of different topics, including our quick start videos, short helpful tutorials, and then all of our comprehensive webinars, which we have categorized into our project management and accounting courses, along with all of our weekly webinars as well. Now, today's webinar is a bit shorter discussion where we're going to be reviewing the most efficient and economical way of recording your payroll into Pro Cloud, and it's all done with one or at most a few journal entries. We're going to use journal entries to record the necessary fiscal transactions in your Pro Cloud when an outside source such as Paychex or ADP or a third party handles the payroll checks. Now, I'm going to assume that you know how to make a journal entry, though we will go through the process in a bit summated fashion. If you would like additional information on just creating journal entries or journal entries in general, go to our YouTube channel and take a look at our how to make journal entries discussion as well. Let me go into greater depth on those types of topics in that discussion. Okay, now conveniently, all we need to have pre-configured prior to recording our payroll into Pro Cloud are the accounts themselves that we're going to be recording this activity. So let's take a look at the necessary accounts. We're going to go on to our accounting tab, of course, under our general ledger frame and click our chart of accounts or our account glossary. And let's look at all the ones that we need to focus on today, starting with the one that's already highlighted, which is our cash checking account. This is going to be the account from which the payroll provider removed or is going to remove the necessary funds. So I'm using the example of our cash checking account 10,010, but it could be an operating account or a savings account or any type of other asset bank checking account. Next, let's look at our health insurance withholding account. This is a liability account. If your employees contribute to their health insurance directly from their paychecks, you'll want to record that amount into a liability account, as your company will ultimately use the funds along with any amount that you provide for insurance as an expense when you go and pay your health insurance premiums. So we have our 24,000 health insurance withholding liability account. Liability, why? Because eventually you're going to owe those funds. Another such account is our 401k withholding liability account. Likewise, if your company offers some version of a retirement plan that allows your employees to contribute directly from their payroll, you're going to need a liability account to record such funds, particularly if the retirement fund is not managed by the same company that processes your payroll. It would be a little bit different if they did so. And you can see here, I have our 25,000 401k withholding account, as our fictional company has a 401k plan which our employees can contribute. Next, let's start talking about some of those expense accounts. Starting with salaries. We have our 61,000 salaries expense account. This is the account that's going to hold the total amount earned by the employees. Notice, I did not say paid. There's a difference there. What they ultimately get in their check is certainly not what's going to equal their actual salary, as we all know. Now, it's not necessary to have an account for each employee, but some accounting professionals, and you should check with yours, of course, they may prefer if you break out the salaries into officer salaries, principal salaries, hourly salaries, subcontractors, etc. I, however, like to keep my records nice and as simple and as accurate as possible, so I'm going to use a single salary account to do so. Again, you could break it out and the whole process would be very similar. Next expenses are our payroll taxes, and these are going to be expense accounts, and they can be one or many. They're going to be the account or accounts used to hold all the business-related payroll expenses, not your employees' taxes. And you could subdivide these into Social Security, Medicare, as I have examples here. But the payroll processing company should have all that detail provided for you. It's going to be in copious amounts of reports that you can review at any time. So that kind of detail is really not necessary in your design manager unless your accounting professional so deems that it is. So rather than having them split into a variety of business payroll expense accounts, you could have a single account, such as I've created here, our 61-100 payroll tax expense. So I'm going to absorb all of those business tax expenses right into this singular account. Again, common theme. I like my entries nice and as simple as possible, knowing that all of the supporting documentation is available at any time from my payroll company. Okay, right above is a 401k matching expense account. Now, if your company is not only fortunate enough to have a retirement plan where the employees can contribute out of their funds, but you also match some expenses, some funds to a certain degree, you would need an expense account to record those expenditures. And in this case, I've created the 61050 401k matching expense account, which we'll see how that works shortly. And that should be separate from your payroll taxes to have those individualized. Again, we'll see why momentarily. Lastly, a payroll service fee expense account. Well, the payroll company's not going to do this for free. Well, maybe they are if you're very, very lucky, but usually they're going to charge you some fee to handle all of this for you. So that expense will be recorded into, in our case, the 61-200 payroll service fee. Some companies will take that fee out right during the process. So out of all the money they take out for your payroll, they're going to deduct their $100, $150 right from that transaction. Others will invoice or automatically withdraw later into the month. Either way, you should have an expense account to record those expenditures. Now, you may have noticed what's very handy here is that we don't need to worry about the employee tax withholdings. Our payroll company is deducting that from the employee's pay right away, and they submit those expenditures for our employees and for us, quite honestly. We'll touch upon this again momentarily. So this really simplifies the process when using a payroll service and then using a journal entry to record all of the transactions themselves. So let's get on to that journal entry itself. The payroll company, you're going to usually receive a ton of documentation, and there are different reports from all different payroll providers that will have the necessary information required to make this journal entry. You can use whichever report or reports that work the best for you, as long as they provide the essential figures, which we're going to review now. I'm going to use a sample cash requirements report, as many payroll providers have such a report, to create our simple journal entry. Again, you can find the same information on a myriad of other reports of different type. So let's bring up our sample cash requirements report, and here it is. In our example, let's assume that our company has multiple employees with employee contributions to both medical insurance and a 401k program. And we'll be paying our processing fee during payroll. This represents one of the more complicated scenarios, which is perfect for our example today. Let's take a look at the information given to us on our cash requirements report. The top of the cash requirements states how much funds or what are they going to withdraw or have withdrawn from our cash account. In this case, in our example, we have $38,299.22 withdrawn from our bank account. And this consists of several payments. First, we have the $100 payroll processing expenditure. That's what the company's charging us for doing our payroll. Next, we have the company's tax liabilities. This is what the company is paying in Social Security, Medicare, etc. That's coming right out of our cash. We also have $9,446.32 of our employee taxes. This is what our employees have, quote unquote, contributed and is being remitted on their behalf. And lastly, we have our total net pay. Like I said before, this is not their salary. Of course, this is what each individual in our company received as their paycheck, what's going into their accounts ultimately. All of those equal our 229.22. Your report may have a total salary or a total gross pay for all employees. This is what the quote unquote salary would be. Again, different than the net pay, of course, but some may not, or maybe on a different report. It doesn't matter. You can calculate your salary, your total salary for the payroll period, if you don't know it already, very easily. It's very simply the net pay plus any of the employee's taxes and any additional withholdings. So those, in our case, it's already summated for us. So you can see the 25,836.26 and the 12,580.46 equal our 38,416.72. That is our total salary. My report already had it on there for me, but you can easily back into that information yourself rather than looking through a whole bunch of reports to try to track it down. All that information is right on these individual reports for you. So this leads into that whole concept of why we don't need employee withholdings accounts. Well, it's that whole difference between the salary and the net pay. Look at all these individual employee withholdings that the employees are paying out to various government services. We can think of it like this. We ultimately give all of our employees a total of 38,000 and change. They know that they have to pay a whole myriad of taxes. So rather than themselves going out and paying Social Security and Medicare and all those types of things, they give the money back to us. We in turn give it over to the payroll company who submits it all for us. So we don't need to bother with those withholding accounts. All that transactions have already occurred by the time that the cash comes out. Really simplifies the whole scenario for us. So let's get down to that journal entry. We have a lot of numbers here, and it's very easy to get them right into the software to record your payroll. And let's see. Let's see if we can't get both of these on at the same time. And there we go. Okay. So we have our cash requirements on our right-hand side, and we have our design manager on our left-hand side. To record our journal entry, which I've already taken the liberty of pre-recording, but we'll review it in detail, we want to go to our accounting tab under the general ledger frame in this case and click on our journal entries button. And we can see I've already crafted or created, yet not posted, our journal entry for our ending pay period as of the end of September. Let's go ahead and edit that and take a look at all of those accounts. First off, we have the journal entry number. Now, Design Manager is going to create an entry number for you, but you may have an internal journal entry number scheme that you prefer, or your accountant may certainly have one as well. I use the designation of PR 09 as the month, so payroll for the 9th month, and then some indication of which pay period is it. 1, 2, or 3, first, second, or third if you're on biweekly, or first or second, or A, B, or C, something along those lines. Just an example that works well for me. The date that the funds were withdrawn, which again, you can also see on the cash requirements report, and then I put in my transaction description, the pay period that it covered. And we can see right off the bat, all of our various accounts match up the information easily accessible on our cash requirement amount. First off, we have the asset account, our checking account from which the funds were withdrawn. That's our 10,010 cash checking account, and we're crediting that account. When you're talking about checking accounts or any asset account, a credit actually reduces the account. So we're crediting it or reducing it by the total amount withdrawn from our payroll company. Next, we have our 2 withholdings accounts. These are the funds that we're holding on behalf of our employees to ultimately submit to other institutions later. So we have our health insurance withholding, and we have our 401k. for 1785.22 for the 401k and 1348.92 for the health insurance. Both of those are liabilities, and they're also a credit. Liabilities go up when you credit them, conversely, to the assets. Why? Well, I'm accumulating into this liability account. The name liability really indicates eventually I am going to owe that, and I will. I'll have to ultimately give the money to my health insurance provider and my 401k management fund team on behalf of my employees. So those two numbers easily accessible right off the report. Next, we get to our salaries. We're going to debit our salaries. Expense accounts go up when we debit them. And again, that number is easily identifiable on the report. If it's not, as I said before, it's the sum of the net pay and all of your employee contributions, which is their taxes and any additional withholdings they may have. You can calculate that value from. Payroll tax expenses. These are the employer tax expenses as we discussed. In our report, they're under our employee liabilities. I don't care to break them out into Social Security, Medicare, those types of things. I just want the total, which I'm recording into my expense account. All of the documentation of the breakdown of the 2846.64 is in my payroll documentation. I send that right off to the accountant and let them deal with it. And lastly, we have another $100 expense for our payroll service fee, and there it is along the top. All of our debits and credits match perfectly. So in one of the more complicated scenarios, we have a total of 6 accounts, 6 numbers that we need to input. Click OK, and we can go ahead and get ready to post this. Now, very simple. The information is going to be on the reports that you have. We just walked through how the journal entry should look. Here's an even faster and even simpler way to do your payroll. In your Design Manager Pro, you have a concept called a recurring journal entry. So let's go ahead and look at our recurring journal entries. And I've crafted a very generic version of our payroll journal entry. Let's edit that to take a look. And we can see I already have all of my accounts with some pre-configured funds in here. Now, this can save you a lot of valuable time, particularly if everyone's salary in the company. These values will change very little. The taxes will change here or there, those types of things, or someone may change their 401k withholding, and you'll have to make the necessary adjustments. But you already have the framework of the journal entry configured for you. And even if your employees are hourly, you can still make the minor changes to each account as necessary. But by having the framework set for you with the necessary accounts, you're not going to miss anything. Data entry will be fast and accurate as possible, and it'll become like second nature. So crafting a recurring journal entry, which you can then tag and choose to bring down and make your edits, is very handy. And again, keeps your data entry accurate as possible. Speaking of recurring journal entries, let's see it in action actually. We saw how to account for the employee's contribution to their 401k, but one number we were missing was the employer match amount. We didn't touch at all upon that, and that will be shown on a variety of the reports from your payroll company. So how do we compensate for the amount that our company is matching, and how do we relieve that liability that we've been withholding from the clients themselves and ultimately paying our retirement management fund company? Let's see. So on my recurring journal entries, here's how to select one. I tag it, and then I click choose, and upon doing so, Design Manager will bring it down onto my new or my pre-posting list. I'm going to go ahead and edit to make a few changes. So if I use the same basic nomenclature as I did for my payroll, I may say this is my 4K 09 for September and my second pay period. My entry date, I want to match on my check date, or actually when I truly did distribute this to the to the 401k company. I can back that up to September. Description, I'd put in the period again, as I did for the payroll itself. And let's look at the information available for us here. First, we have the 401k withholding, but this time we're debiting it. So on our payroll, we were crediting it or putting it into the liability account. Now we're alleviating that liability or reducing it and reflecting that we're paying it off to the management company of the 401k plan. My 401k matching expense account, that number is listed for us on the cash requirements as well. Add those together, and we get a total payment to the 401k management company of $27.31. So they may often withdraw that automatically. So I'm going to credit or reduce my cash checking by that amount. And there we go. We can see my update to the edits I've made to that journal entry. Now all we have to do, I could print a journal if so desired for my records, but we can go ahead and post. And now they'll be on our existing tab. We can see them listed. And we can see the effect of those journal entries in a variety of areas. Let's expand our design manager. We don't need our cash requirements anymore for the time being. We could see them in our checkbook back up to September. And there are the two journal entries that we've created that are reducing our cash account. And I can even use the details button to see all of that information. Basically, I get to see a screenshot of the journal entry that we just made. Oops. Just like the entry we made on our journal entry window itself. And the same with our 401k payment. We also will see all of the various account balances that we just affected reflect our journal entry. Let's go over our accounts. We can see that our health insurance with, our 401k withholding, well, that's zero. Why? Because I withheld from my employees their retirement funds, and then I already submitted it off to the retirement plan manager. But our health insurance withholding, that has a balance. That's the amount of the employee's contribution that I have not yet submitted to my my health insurance provider. Then if we look at our expense accounts, we can see our salaries being recorded into the appropriate month, along with our payroll expenses, etc. So that journal entry did all of its magic throughout Design Manager. Once you have the numbers, make that recurring journal entry, simplifies the whole process, make a few tweaks here or there. It's really that easy, and all that documentation is provided to you from your payroll company. Lastly, since we're really being very efficient today, let's talk about or tie in one more concept. Like our 401k withholding, we also recorded our employees' health insurance contributions into the medical insurance withholding, as we just saw, and it's still there. Let's finish our discussion on how we ultimately pay our health insurance provider. In that case, we'd go over to our accounting tab, bills and invoices. And again, I've already crafted an operating expense for Aetna, who's managing my healthcare. Let's edit this and take a look. So we can see I have my vendor selected, my invoice number. I'm just using a description of what I'm paying for, date, etc. But I have two distributions into my payment to Aetna. The first is our withholding account. That's our 1348 from our cash requirements. The second portion is an expense account. This is the portion that my company's paying for my employees' health care. The two of them together are the entire amount that I currently owe Aetna. When I post this operating expense, it's going to debit or reduce the liability account and increase the expense account simultaneously. So I have two distributions crafted for Aetna that's going to relieve or take care of or reduce what we've paid, we've accumulated from the employees, plus increase our expense as well. We could also make one of those as a recurring expense, just as we could do in journal entries to keep it, again, fast, as accurate as possible. And upon posting, We can now see, if we